Well, good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Thursday, June 2nd, 2022. And our top story today, finding affordable life insurance. And joining me now to discuss this and a lot more, Phil Snyder is a Senior Vice President and also my father with the L. Warner Companies, Inc. Dad, great to see you. Thanks so much for joining us on the program this morning.
Jeff, my pleasure. Thanks for having me.
Okay, so picking up the conversation about life insurance and health insurance and different types of insurance products, I want to ask you about affordability because that seems to be a key driver as to whether someone will financially secure themselves today and in the future. So first of all, is life insurance affordable?
Well, I guess that's the answer to that is relative to the people who are doing the purchasing, but by and large, I would say that almost anybody can afford to buy some form of life insurance. For example, 10-year level term insurance, which is effectively a term of 10 years where the premium remains level for 10 years and then goes up thereafter. That's probably amongst the least expensive forms of insurance available. And that is really very affordable. Probably a $500,000 policy on a 40-year-old that would last for 10 years is probably a healthy individual less than $20 a month. So one could create an estate of $500,000 at the stroke of a pen for probably $20 a month, something like that. Now, that's at the low end of the spectrum, and certainly there are more costly products that can do more than just a level term policy. But that would be something that I would think any person that has financial responsibilities for others, for the care of others and the maintenance of others, could do that relatively inexpensively and affordably.
And you're right. I mean, cost is all relative to our own balance sheets and our budgets and what we earn in terms of income. But, you know, Americans now and people around the world, it's not just Americans, facing rising gas prices, food prices, supply chains disruption that is causing higher cost of goods and services, diesel fuel prices that gets added to the cost of products. But I think we learned some lessons during the pandemic that being financially prudent at any level of the socioeconomic scale, any type of income, is the prudent thing to do. Are you seeing more interest in life insurance within your practice, but also the practice at the Warner Companies in general?
Well, our practice is more skewed to a certain demographic group. So there's always interest in life insurance within our group because it serves multiple purposes that go beyond just providing income replacement at the family level, so to speak. So we are very busy reviewing insurance, proposing insurance, things of that nature. But I would say in general, looking at it more from, let's say, the average family individual in this country, in the U.S. and certainly outside the U.S., life insurance is very affordable, albeit if all you're buying is a 10-year level term policy. There's anybody, I think, at this point could find $20 a month or $15 or $30 a month, whatever the case may be, just by limiting their spending, let's say, on extraneous items, and they could provide for their family. So hopefully that addresses your question. I do realize there are some people who absolutely are under the gun and just can't afford to pay any additional dollars out at this point in time, but I really think that group is relatively small. If people really have concern about providing for their family in the event of a premature death, then I think there's a way to afford life insurance. The problem is one of accessibility, more so than affordability, I think. For those who are making relatively modest purchases with, I'll say, relatively modest amounts of premium, They can do that online. There are any number of services that would provide that type of coverage in a simplistic manner. It would be hard to get an insurance agent as such or a broker to engage for a $20 a month premium, being realistic about it. But at the same time, you can certainly acquire that type of coverage online. It's pretty simple to do.
Let me ask you a question that, part of the due diligence process that I think a lot of people don't even really think about, just my perspective, I want to get yours, and that is the solvency of the insurance company. People very rarely give a lot of thought, I think, to the credit ratings of the insurance company. And is that something that you should take into account? So you have the premium, you have the benefit, you have the term, you have whether it's term or whole life, just talking in generalities, and what the benefit will be. But what about evaluating the insurance company and whether their abilities financially to pay benefits?
Well, there are rating services that one can look to historically that provide ratings on insurance companies. If you're just buying 10-year term insurance, I certainly you want to buy from a company of a higher rate with a higher rating than a lower rating. But if you're not creating value within the policy, that is cash value, we call it, within the policy, and all you're buying is pure term insurance, I don't think it's quite that important because you're in for a relatively short period of time. You also have, most states, if not all states, have some form of guarantee that if an insurance company were to default, that the state would make up at least a portion, if not all of the proceeds that would otherwise be paid. And then you have the industry in general, that where you have a defaulting company or a company in receivership, that other major companies within the industry would buy up that liability. I think carrier quality is much more important long term, where you're building value and you're in for the really long haul. Then I think the quality of the carrier is really very significant. And by the way, that's not an absolute certainty that all those carriers will remain in existence long term. It's not a guarantee, but at the same time, I think it's a higher level of assurance that a higher rated company would be around for the long term, more so than a lower rated company. And there's very little to be added, if anything, to buy from a higher company, a more highly rated company than a lower rated company. So yeah, I think it's clearly, I would look towards more highly rated companies. And there are a bunch of them out there.
Yeah, absolutely. I mean, there are a lot of good companies, and candidly, the insolvency has happened on very, 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 very rare occasions. And my belief, maybe 20, 30 years ago, and shareholders, policyholders got back 100% of their benefit over time. So it's not like something that would just poof go away. So we're not talking about something like the Great Depression of the 30s. Dad, yeah, I need to take.
Let me just mention.
Go ahead.
I've been through one of those insolvencies 30 years ago, and they're not pleasant to go through. But every policyholder, in fact, was made whole, so no one lost any money. The converse to that is that we're doing a review now for a particular client, and we're finding that what they bought 20 years ago, which was dividend-paying whole life insurance, the acquiring company that now holds that business because of the default of the issuing company is no longer paying dividends. So, and dividends were a meaningful part of the overall projection of policy value when the policy was purchased. So there are some negative results out there, so which just leads to the point that you really should be buying from high quality companies if you can, or at least highly rated companies. Again, that's not a certainty of long-term security, but it's certainly a favorable indicator.
And it sounds like you should be checking your policy at least on a periodic basis to make sure that,
Absolutely.
For example, you're getting dividends. Well, Phil,
Absolutely.
Dad, I need to take a very quick break. I apologize. We'll pick it up on the back end. When we come back, we'll talk about long-term care policy. Well, I think you're going to need it, but what if you can't afford it? You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Are you stuck with a low credit score? A credit report and score that's causing you to be denied credit or pay higher interest rates than others for the same things? Then do what Terrence did and call Credit Repaired for your free credit evaluation to help restore your credit.
I started thinking about buying a new house, and my score wasn't where I needed it to be. I called and spoke with one of the representatives, and we just had a good conversation, and I liked what he was saying.
Just one call for his free credit evaluation was all it took to start back on the track to repairing his credit.
I'm seeing the deletions and I'm getting the report, so I know something's being done. It does make a difference to me.
All it takes is one call to get started.
Credit Repair has given me a second chance to have a better credit score.
Don't let a low credit score hold you back another day. Do what Terrence did and make the call for your free credit evaluation.
Call 800-819-4152. That's 800-819-4152. Again, 800-819-4152.
Welcome back. We're talking this morning to Phil Snyder of the L. Warner Companies, Inc. Phil, Dad, thanks so much for staying with us this morning.
Sure, my pleasure.
All right, let's pick up the conversation. We talked about the importance of life insurance and that it really is affordable for most people, except maybe people that are having some really, really challenging circumstances today. Let's talk about long-term care insurance. And I saw this stat, made me think about this and why I wanted to talk to you about it. Fidelity recently came out with a report that said that healthcare, as we age, as we get older, people in our 60s, 70s, 80s, will pay close to $300,000 in today's dollars for healthcare. It really makes the case for some type of policy to pay towards long-term care. I want to get your feedback on that.
Okay, well, let's define long-term care, because long-term care services are not covered by health insurance. Long-term care is essentially custodial care for people who need assistance in their daily lives to accomplish the daily tasks: dressing, feeding, bathing, continence. There are several others that are listed. And those are items that are not covered. Standby assistance is not covered by health insurance. There is some very modest coverage under Medicare, but that coverage is really relatively small for a relatively short period of time. For those who have no ability to purchase long-term care insurance and who don't have accumulated assets at a meaningful level, they could look to Medicaid, which are state-run programs, but Medicaid are for those that have very modest assets and have no other way of paying for coverage, or paying for services. So Medicaid is available, but it's not something that the average person who has accumulated some money during their lifetime is likely to take advantage of. I'm sorry, go ahead, Jeff.
No, finish your thought. I jumped on you.
So you have to understand what long-term care insurance covers. And it covers the cost of those types of services where you need, let's say we have someone who has suffering from dementia. That person is going to need perhaps as much as 24-hour around-the-clock care. Well, that type of care in today's environment is hugely costly. And so if you don't have the assets, or you have more than too much assets in hand to not qualify for Medicaid, then what do? You're in a real, I guess the old term would be pickle. You don't have enough assets to cover the cost. So now you're looking for other sources of assistance. That could be family members or people such as that. And those kinds of services are limited. You can't necessarily expect family members to provide 24-hour round-the-clock care, or even ongoing modest levels of care. So long-term care insurance, I think at least, is a meaningful component of long-term planning for most people into retirement. And you're right, I read that report from Fidelity, and those are pretty scary numbers.
Yeah, and those are today's numbers. Who knows? And they're only going to go up. The costs don't typically go down. Not in healthcare, not for some of those things. And we have a shortage of caregivers. But Dad, I want to ask you about the average American family out there, the people that we were talking about in the first segment with life insurance, purchasing long-term care insurance. I mean, outside of Medicare, maybe Medicaid, maybe assets, can they purchase long-term care? And what would you estimate? Just take that 40-year-old person of reasonable health. What would you estimate in terms of a premium on a monthly basis?
Well, first of all, there are multiple ways to buy coverage for long-term care. I guess for someone who owns what I'll call a permanent cash value life insurance policy, there are products available in the marketplace that will let you add a benefit to those policies. You probably can't add it to an existing policy, so you'd have to consider you're replacing or adding to your existing cash value life insurance policies. But there are products that will allow you to access the death benefit provided under that policy up to a stipulated monthly level of reimbursement or indemnification under the policy. For example, if you have a $500,000 policy, you might be able to access as much as 4% per month of that benefit, or $25,000. I guess that's $20,000 to offset the cost of long-term care. So you've in effect have created a pool of money within that life insurance policy that can be used for long-term care needs. But to the extent that the face amount of the policy is not totally exhausted, the balance would be payable upon death. So that's a simple way to do it for those that have those types of policies. There are freestanding individual long-term care policies, but they're expensive, and the number of carriers that are now offering those types of products are very few and far between. So without naming carrier names, there aren't many that are offering individual long-term care policies, and they are expensive. Having said that, one doesn't have to insure 100% of the benefit that might be payable downstream. So you could buy a basic long-term care policy today that, let's say, provides $5,000 a month for 3 years, for up to 3 years for any claim period. And I don't know what that would cost off the top of my head, Jeff, at age 40, but it would not be a lot of money. So there are ways to address the need, at least on an interim basis, and add to it over time. Add to your policy over time as your ability to pay premiums increases.
Yeah, no problem. I want to ask you the same question I asked you in the first segment, which you answered very well, very eloquently, about the 10-year term policy. Let's take a look at what do you have to think about with these policies long term. So let's take the 40-year-old. He, she, they may not use this policy for 20, 25, 30 years. So can a life insurance company change the terms like you were talking about with the dividend, no longer paying a dividend on that policy you were talking about for one of your clients? So what do you have to be thinking about long term with these policies, these long-term care policies?
Well, you have to factor in growth in cost, so inflation. And so if you just use a 3.5% growth rate over time, you can see what's going to happen if you're 40 years old and you don't need the policy till 35 or 40 years downstream, and you're compounding today's cost at 3%. you can see that how those monies needed are going to grow substantially. So I think you need a cost of living adjustment. You may not be able to afford that today, but long term, you're going to need a lot higher benefits. There are products in the marketplace that you can buy that guarantee 100% of those costs, so there'd be no variables. So you can buy a product, it'll pay a long-term care benefit. It'll also pay in the event you don't use the long-term care benefit, a death benefit that through which one could recover 100% of all the premiums paid for the policy. So there's a certainty of a payoff, but you can build in a cost of living rider, and 100% of the cost and benefits will be fully guaranteed by the carrier. So there are no variables. There are no concerns about increasing premiums on a long-term care policy. And there are no concerns about the efficiency of a cash value life insurance policy performing up to expectations long-term. So there are lots of ways to solve the problem, I guess. But you don't have to solve 100% of the problem today. If you begin buying some benefit at a young age and ideally add to it, then I think you're going to be better off than if you defer until, well, let's say until you think you can afford it in the late 50s or into the 60s, when the cost, who knows what it'll be downstream, but it'll be significantly higher, and you'll be paying for it in all likelihood well into retirement. So I think it's little buildings, small steps.
Yeah, I think you're right. And that applies to so many financial aspects of life, whether it's retirement, life insurance, long-term care, working out, right? I mean, you don't have to, Rome wasn't built in a day. Fell pretty quick, but it wasn't built in a day. Dad, we're going to have to leave it there. Great to see you as always. Thanks so much for joining us. And we look forward to having you back on the program again very soon.
Jeff, it's always my pleasure. Thanks. I think it's a good topic and one we can address in greater depth in the future.
Thanks, Dad. Great to see you. Thanks for sharing your perspective. That wraps up this episode of BRN AM. Have a topic of interest, somebody you think we should talk to? Drop us a line, and don't forget, for all the latest curated news in lifestyle, wellness, finance, tech, so much more all in one place, check out today's edition of our daily newsletter, The Morning Pulse. Want to search our archives or check out our latest content? Well, of course, you can visit our website. That's www.broadcastretirementnetwork.com, and also our streaming partners. We're back again tomorrow for another edition of BRN AM. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes. Now is your opportunity to co-create content around any topic on the first lifestyle and wellness network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.